Good morning, everyone, and welcome to this morning's webinar. Thank you for taking the time out to come and join us being myself, Anna Cooling, and my husband, David, who is sitting behind me. And it was all very exciting this morning. I got the chance to start the webinar, so I'm in a really good mood. Anyway, before we start, as always, can I draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So very quickly, maybe for those of you who are coming along for the first time, we are going to be looking at obviously the forex market and the charts, and we're going to be looking at the charts through the prism of what we call volume price analysis. It's a methodology that is outlined in the books on Amazon. And it essentially looks at price action and volume to see, to confirm, to get some idea of whether the move that we're seeing on the chart is actually genuine or not. And with regard to the forex market, not only do we look at the charts, but we look at what's happening on the fundamental news release side, and we also look at related markets. And this is perhaps another element that, well, I know a lot of traders don't, until now, I would say, have probably not paid very much attention to, although, I don't know, since maybe the book's gone up onto Amazon and what have you, but I see more and more comments, analysis on specialist sites that now talk about related markets in terms of what they're telling us in terms of sentiment, and then tying that to the moves in individual currencies and currency pairs. And if you like, one of the pairs that is often used as a proxy for risk sentiment is the Aussie yen. And the Aussie yen is something that I want to talk about, certainly what happened yesterday, and also to see what's happening this morning with the pair, because if you've looked over on one of the, investing.com or whatever site you use, you can see that certainly sentiment is very positive. The US indices keep climbing higher, the DAX futures are higher. The world is, one would not think that we are going through this awful time in terms of the virus. So many people are out of work, whole industries are not expected to recover, the pre-pandemic levels, as it were, but hey ho, we can only look at what the markets are doing and hopefully find a trading opportunity. So that's what we're going to do in this session. And what we've also done, we also look at the markets with the help of our own quantum trading indicators. I know some of you who come along to these sessions already have invested in these indicators. Some of you are already on the forex program, which is running at the moment, so it's great to have you with us today. Essentially, the quantum tools that we've developed, these are the forex specific ones, which tell us at a glance, if you like, which currencies, individual currencies, are actually moving. As we can see here through the currency strength indicator, each line represents a currency. Is it being bought? Is it being sold? Is it doing nothing at the moment? It's simply stuck in the middle of the indicator, perhaps moving sideways. Which are the strongest in terms of which of the currencies that are being bought most strongly? Where are the flows going into into the currencies, and in what time frame? So it gives us an instant visual picture of not only what the market is buying or selling, but it also tells us via that buying or selling, gives us an indication of what the sentiment of the market is. We have the matrix, which takes the information and pairs it and ranks the pairs, the strongest, the weakest pairs. We have the array, which really is a measure of the strength of trend in the individual pairs, and trends are something that I want to talk about a little bit in more detail in this session today. And then we have the currency heat map, which looks at the performance of the pairs across the multiple time frames. So you can just look at 28 pairs, what are they doing in the different time frames? And I think it saves you having to look at, is it over 300 charts, David? You've done the math. Right? Yeah, it's almost, this actually summarizes what is happening in almost 300 individual charts. So that's what we're going to do. as I said, I want to look at trend this morning. I want to look at trend structure. I also want to have a look at how you have to be aware that moves can change dramatically in different sessions. And the currency I want to have a look at in particular is the Canadian dollar, because the Canadian dollar yesterday, in fact, if I bring up my picture that these images that I bring up, by the way, you will find them. I do the write-up for them. You will find on my Facebook page, which is the Learn Forex Trading page. If you type my name and put Learn Forex Trading, it will bring it up. There's I don't know, 35,000 odd traders, like the page, follow the page, and what I do, I just take screenshots and explain pretty much what I'm talking about here. And essentially what I want to have a look at is, this is from yesterday, and the purple line here is the Canadian dollar, and we can see here on this line, we can see here that it had a pretty, a dramatic fall yesterday in the trade. This is the hourly chart, and this I took at I can't remember if this is morning or afternoon, but it doesn't matter. Basically, the Canadian dollar sold off very heavily yesterday. And one of the things about these indicators that we also look at is the steepness of the line, because the steepness of the line also tells us if there is some momentum in the move, that it's, there is good, strong selling or strong buying. If you compare this line with all the lines of the other currencies, you can see the pound was sort of going up, then it was falling back, then it was going up again, and it was falling back again. It was doing all sorts of things. The dollar, that also had a bit of a recovery, but certainly not to the extent of the Canadian. So it was very much, a Canadian dollar story yesterday. But you think, oh, great, well, a trading opportunity. Maybe the Canadian is a currency you like to trade anyway. But when you look more closely, you look at the pairs where that selling was occurring, it wasn't consistent. It wasn't, although the Canadian was selling off, what actually happened was it was selling off very strongly against the euro in the morning, but by the time the US session came along, that came to a pause. It came to a significant support and resistance level, and if you like, the selling was then carried on against the US dollar. And in fact, I have the pictures here as well. So this is the euro. This is the euro Canadian. So I want to talk about, as I said, I want to talk about trends in trends of themselves in terms of type of trends, whether it's a smooth trend, whether what we call it's a choppy trend. In the Forex program, we have something called the C states. A trend is a trend because it's going higher, and it's perfectly clear it's going high. You've got higher highs and higher lows. Now that's a really nice smooth trend. It's got a bit of a pullback and then it carries on. But when we compare that with the trend that we had in the Aussie yen yesterday, pair for, as I said, for proxy, because the indices were surging higher yesterday morning, it bears no relationship to this trend that we see in comparison to the euro Canadian, because not all trends are equal. Some have volatility, some are volatile, some are choppy, some grind higher, some have a lot of momentum in there. So it's all very well people saying, oh, the trend is your friend, find a trend and follow it. You have to be able to recognize, well, what kind of trend is it? This, as I said, this is all explained in very great detail in our Forex program. And also we call this what we call a primary trend. So this is the main trend, and this is a secondary trend. And what we do is this, when it got to this point here, was this going to be a reversal, or was it simply a pullback? And the way you determine that is you look at the volume, what is going on under here. But let me just go back to what this trend in the morning. We can see here at 8 o'clock, this is the start of the London session. I use Ninja because the timestamp at the bottom of the chart is easier to recognize. With MT45, you've got to usually take a couple of hours off. So we can see here the London session, it had been in sideways. That's very typical of congestion coming into London. We had volatility trigger here, a lot of volume going under there, but because the volatility indicator was triggered, meaning that this price action was outside the average true range. Great opportunity to trap a lot of traders who think that it's probably going down. In fact, there was, you know, there's buying in there. How do we know? Well, we've got a wick to the bottom, and we've got the volatility trigger triggered, as it were. Then we know it's not going down, because the next two candles here, the volume is actually, it's not, you know, it's not hugely low, it's not massively lower, but it is lower. It's certainly not the volume that we've got here. And then in fact the trend does actually start on really very nice volume, as we see here. Up and up it goes, and through the different support and resistance levels as measured by our Camarilla indicator. Because with trends, the other element of trend is, where is this trend going to? Where is this price moving? You know, where is it going to pause? Where is it going to stop? And this is where you have to have some way of marking support and resistance on your chart. We use price-based support, we use volume-based support, and then that support and resistance is then, if you like, given some kind of, it's given a priority, if you like, given a hierarchy with our Camarilla indicator, and off it goes through the R1, goes up to the R2, pulls back R3, then pulls back to the R2, a little bit of congestion, and then it goes higher. But the key with this trend is look at the time, look at the timestamp under here. This is the morning session going up very nicely. I think the Renko chart looked very nice as well. There's nothing, you know, to be too scared, if you like, in this particular move, if you like. And you know, but we come to the start of the US session. Here we have this is the start of the physical session, 2:30. We've got a ton of volume going in under here, but the price isn't going higher, because this is what VPA does. Not only does it confirm whether the price is genuine or not, it also highlights the anomalies. And in fact, there's a ton of volume going in, but it didn't go anywhere. Partly possibly because it was the session crossover, but more importantly, it's hit this very important resistance level, which is the R4 on the Camarilla, and in fact it's simply moved sideways. Now when we compare that with, let me see if I can find it, hopefully I can, yes, the dollar Canadian, same currency that was selling off strongly throughout the day, if you like. Look at the comparison. Here we have the start of the London session. We have the pair, the dollar Canadian, trading at what we call the volume point of control. This is the, if you like, this is the fair value area of the chart. There is no firm when price is at the volume point of control. There is no firm direction, and certainly we didn't have any firm direction on this pair. It simply moved sideways. It was also constrained by a very strong level of resistance, and we had a very strong support level. The volume point of control also acts as support and resistance, as well as being fair value. It simply moved sideways, and in fact it then did actually break through, as we see here, at about midday, to a support level of volume, a VPOC support level. This is what we call the volume point of control, the VPOC here at 130, 135. But a very nice hammer candle come in. Lots of, some buying coming in. It's actually the highest volume, well, since the start of the London session. So we had the buying coming in. So we knew there was price support coming in, and then the trend starts to move higher. But it's got a bit of a struggle, because what support and resistance also, these support and resistance lines, zones on the chart tell us that when price reaches these significant levels, it's going to need a little bit of fuel. It's going to need a little bit of oomph to get through. And what happens? It manages to get back to the volume point of control, moves sideways. We've got some little very narrow spread candles here, but with some decent volume underneath it. So we know there's price support. Then we have the start of the US session, which is at 14:30, and then the volume really starts to come in. Now, with the dollar CAD, you also have to bear in mind that because of these two, obviously the Canadian is local to the North American session, you will often find that the traders local traders come in, Canadian traders, so it's going to be more heavily traded anyway. So that we would expect that, but this is very nice. And then we have the volume coming in, rising, rising, rising. We have a little pullback here, a little bit of weakness there, but the next candle comes up and on it goes until, in fact, it kind of then went into a sideways consolidation, which we would expect at 1830. And in fact, I think it's actually been selling off. I think dollar CAD is one that I've been looking at. So that's that trend. As we can see, trends in terms of smoothness of trends, consistency of trends, moving away from a breakaway region, looking at support and resistance regions in terms of price and volume to see whether the trend is likely to stop, pause, or carry on, and also overlaying that with, well, where are we in the actual session? Now, if we compare that with what we had with the Aussie yen, if I can find it, just give me 1 second. Oh, here it is, it's over here. As I said earlier, the Aussie yen is a pair that is used to not confirm, it's a proxy for risk. Is there risk appetite in the market? And if the Aussie yen is going up, then we know, the market is in a good mood, indices are moving higher, participants are happy to take on more risk. So we look at this. This is a trend. You say, oh my goodness, it hasn't got volatility. There weren't any volatility triggers in there, in the sense that the candles weren't outside of their average true range. But it's choppy. It is still going higher. We also know it's going higher because we have indicators that what we've developed in quantum, apart from the forex specific ones, we have developed indicators that help us with support and resistance. The lines that you see here, this on NinjaTrader is called the accumulation distribution indicator. And what that means is these areas, the thicker the lines, the stronger that either resistance or support. And in fact, on the chart, it will tell you the number of times it has actually been tested. So it gives us an indication of, well, how strong it is. And when it has to go through, as it did here, it is going to take a lot of effort. Conversely, when it acts as support, you also know that it is going to act as a very strong support line. And what you also use with these lines is you would also use it to help you with your stop loss, and also as a potential, if you like, target or price objective. Now, we know this. I know this was in a trend. Why do I know this is in a trend? Because the two indicators that we've developed specifically to help us with trends, the trend dot, which is this little dot here that appears on the candle, stays blue. We did have a little bit of red that they changed to red here when it looked like it was going to pull back, or certainly potentially reverse. But also the trend monitor. And it didn't stay consistently bright blue. There was when it goes into this sort of halfway color, this darker blue, there is the potential that this trend is perhaps coming to an end and going to reverse. But it didn't. It stayed all the way up. But look at that. That is, if you were trying to sit through that, there was just no way you can sit through that. The pullbacks against you, certainly without understanding how trends work. And yet, you would look at the market, at the related markets, you say, well, why is the Aussie yen, why is it struggling in this way? Because, the indices were going higher. You may decide, you know what, I know the indices are going higher. I know this is a proxy for risk sentiment, but, I really don't like the look of this. There's too many pullbacks. I'm going to find something else. And you would look at something perhaps like the Euro Canadian. This is exactly the same time frame yesterday morning, and this is what was happening in two very different two different trends in into pairs. But then what you would also look at these pullbacks here is you would look at the candles. Yes, it is pulling back, but there is buying support coming in. How do we know there's buying? Because we have wicks to the bottom of the candles, and we've got reasonable volume going into that. Then it carries on higher, and you would then use again your support and resistance lines. As I said, this is based on the VPOC. Once it clears through there, it did manage to get, climb higher. But it was a grind. It was choppy. And as an intraday trader, what do you do? Do you if you think you can stay with such a move, fine, but in my opinion, you'd probably be better off looking for something that would give you a little bit more consistency, something like this, which is easier to follow, much easier to read, as it were. And when you combine this with perhaps a Renko chart, and that is smoothed out, then that's fine. Now on the Aussie yen, I did have the Renko chart up, and it did actually help to some degree. In fact, I haven't got but even there was, there was a couple of occasions when the Renko had said, come out. The way I use the Renko is when the trend dot and the trend monitor change to the same color, the bright color, then you can use it as an exit. But when it changed back again, you would simply re-enter. But it was really choppy, when compared with the trend that we see here. But if you understand what you're looking at in terms of trend, in terms of session, in terms of support and resistance, both volume and price based, it should help you make certainly take some better entries, as it were, in whatever trade that is coming along. Right, I'm just going to stop there. I've actually got, I think, have you got a Canadian pair? You've got CAD yen, haven't you, David?
No,
have you switched to pound CAD? Oh, fine, okay. In fact, I was going to look at today. In fact, I've got the pound CAD on my Ninja Trader on the 3-minute, the 5-minute with the tick speedometer. And in fact, this was the move that I was looking at this morning. Again, we had a bit of congestion, but a really nice move lower from 7 o'clock. Quite unusual, actually, to see the so much activity in this pair. We've had London. It looks like we've had a nice reversal, but I leave David to sort that one out for you. And the other one I brought up was the dollar Canadian. Let me have a quick look here. What have I got here? What has that been doing? Let's have a look. In fact, no, I'll leave David to do he's been monitoring it more closely. I simply picked it up from this morning based on the CSI that we've got here. I've got this on this is the hourly chart. This is the 10-minute that I've got here on the pairs, if you like. And in fact, I had the Canadian up, and it was the pound, when I looked at it, was right down at the bottom, and that's actually had this nice reversal high. But I'll let David talk you through that. And this was the CSI yesterday, which I've actually taken off some of the currencies. This is the move, as we saw yesterday, in the Canadian moving lower. This was as I said, the point at which we had the reversal in the euro. If we can see here, the euro was rising, the Canadian was falling, but the dollar Canadian at the time, they were moving in the same direction. So that was telling us, yeah, there was movement there, but there was certainly no trend, no strong trend at that point. But then we had the cross. The dollar went higher and the Canadian went lower, and that's what we picked up in the move that I was showing you. And very, very quickly, just to see what's happening today. Couple of things. Yesterday was just extraordinary. There was no fundamental news, but everybody's looking forward to the Jackson Hole Summit, where we've got it's sort of get together with all the central banks. It's a yearly event. Of course, it's going to be virtual this year. There is talk that Powell is going to make some quite important announcement with regard to how the Fed views inflation. So I certainly, if you're, if you trade gold, if you're interested in gold, they will certainly be paying very close attention to what he is likely to say. But that's really the highlight of the week, as it were. But there are still, fundamental news releases that are coming out since then. None of them are given sort of tier one. Doesn't mean that they're not going to be, perhaps move the currencies. We just have to pay attention to them, keep an eye on sentiment, but I think everyone, as I said, will certainly be waiting for what he's got to say about inflation. Right, I'm going to stop there. I'm going to pass to David. Let's go and see what's happening in real time, and I will go and see, look for another trade as given David is going to be looking at the pound CAD. If you've got any questions, just pop them into the chat box. We'll answer them either on air or type an answer in the box.